Very good afternoon, everyone. Welcome to yet another uLaw webinar. In today's webinar, we're going to be covering the basics of legal office or law office expense management. We're going to talk about the two major categories of expenses that a law firm or a legal firm would incur with regards to managing client expenses. They're otherwise called as disbursements, and we'll talk about the responsibility that you have of managing your own business expenses to manage the profit and loss and to run your business as a legal entity. Today's webinar has been accredited for 1 hour of CPD credits, of professionalism credits, in the provinces of Ontario, British Columbia, and New Brunswick. So for friends and legal professionals joining us from these 3 provinces, you do have 1 hour of CPD credit for having attended today's webinar. We kindly request you to use the topic Law Office Expense Management, search on it in your appropriate Law Society website portals, and you should be able to utilize or report the 1 hour CPD credits by using the Law Office Expense Management as the title to search for. Okay? I once again request you to mute your phone lines and use the chat window to ask us any questions that you may have during the session. Like every other uLaw webinar, today's webinar has a very specific agenda, even so because of the CPD nature of the webinar itself. We're going to fundamentally focus on law office expenses. We're going to talk about the differentiations between client-related expenses that are otherwise called as disbursements and your business or office expenses that you have to incur or you may incur to keep the lights on and to run your legal business. Okay? We'll talk about the differences of these two different types of expenses and kind of get granular in terms of subtopics around both client disbursements and business expenses as the nuances across these two categories. We'll start with disbursements. How do you manage them? The opportunity that you have to report these expenses across both the trust account as well as a general account. And then we'll talk about specific examples of disbursements that are more general disbursements, such as unit rates, mileage, any outsourced work. And we'll talk about the expectations that the Law Society has with regards to not only bookkeeping, but with regards to the types of reports and documents that we expect, let's say during an audit or during spot audit, or the expectation from the Law Society for you to generate these documents on a timely manner. Okay? After having covered disbursements, we'll then jump into how do you manage office expenses, the obligations that you have, and the documents that you may have to produce that reflect these types of expenses that you recorded as part of your bookkeeping software, such as office expenses such as rent, Law Society fees, insurance fees, any bank charges that your bank may apply for managing a certain amount within your bank account, salaries for your employees within your firm, corporate tax, rent, etc. Okay, so these are just some simple examples of the types of office expenses that a law firm may expect to incur on a time-to-time basis. And last but not the least, we'll look at what is an expense book and how it amalgamates information both from the disbursement as well as from your office expenses, including the taxes that you may have paid, which is a very important component because the taxes that you have received from clients and the taxes that you've paid as part of your expenses are what are married together to produce the final HST report that reflects how much of HST you owe back to the government or you should receive from the government. Okay? And we'll also quickly draw your attention to why it's important for you to keep an eye and be on top of your expenses and how having a single dashboard or analytical view on the expenses would certainly help you plan better and be smarter with your business and smarter with your expenses. Okay. So let's dive right into it. So let's start with our first category of a law firm's expenses, which are client expenses, otherwise known as a disbursement. Okay. So in terms of defining a disbursement, obviously we've taken this from Wiki and we've tried to define it from a layman's term. And again, this slide share and the demonstration to follow is being recorded and will be available to you at the end of the session as early as Monday or Tuesday next week. So again, I don't want to read through these slides, but I'll focus my definition of a layman's term of what a disbursement is. A layman's term is expenses incurred by a legal firm for your client or on behalf of your client by your law office or your legal office. Okay, so that's as simple as it can get. As I've defined, there are two types of expenses. One that you incur on behalf of your client, and there are expenses that you incur as a legal firm on behalf of your business, office expenses. So this strictly talks about client expenses or disbursement. And the disbursement is nothing but expenses that you've incurred for your client by your law office. From an accounting perspective, what that really means is that you are obligated to record in your books each of these transactions. Okay, you need to track when that transaction occurred, how did you pay for it, was there any HST involved, what was the reason for that expense, and the fundamental reason for why you need to capture that is that a disbursement is a recoverable expense. So I'll repeat, a disbursement is a recoverable expense, which means that you have the right to actually get paid as part of your invoice whatever expenses that you've incurred or whatever disbursements that you've paid for on behalf of your client. And how do you communicate best that this is an obligation that your client has with your legal firm? And that's through either the retainer letter or an engagement letter that you may sign up with your client even before you get started in representing him or her or an entity as a legal work or as a matter, right? Before getting started with your docketing and all of that, you would obviously sign up a retainer letter which clearly outlines the obligations of the client, and a very important obligation is that they respect that they pay you for any disbursements that you may incur as a legal firm on behalf of that file. Okay? Knowing that there is that obligation for you to record these transactions, the second purpose for why you want to record them is because the recoverable nature of this expense, you don't want to miss out and have that become an office expense that you have to then, you won't be able to recover. If you don't capture it in time to reflect it in an invoice, you do stand the risk of having to write it off as an office expense. Okay, so it's very important that you capture, especially disbursements, as and when they happen, and make it part of your invoice in a very timely manner. The bottom line from a law society's perspective and from an audit standpoint is that you manage these books, whether it's an expense book or the appropriate ledgers and journals, that you manage and maintain them, because those are the documents that would tell the story about how you recorded these transactions, how you manage your practice, and how you manage client dollars. Okay? Just as a contrast to disbursements, we'll look at what are office expenses or business expense. From a layman's perspective, these are expenses that you have incurred for keeping the lights on in your legal office or your law office. Office expenses are not recoverable from your client because this is the law society fees that you have to pay. This is the rent that you have to pay to run your business. This is the paper. This is the fax machine, laptop, tabs. These are the expense that you incur to run your office, to represent yourself as a legal firm. Okay, so these are not recoverable from a client. But from an accounting perspective, you still need to manage and maintain these expenses very much as part of that expense book that we spoke about. So the expense book not only tracks and records the disbursement expenses, but also the office expenses. And an important component of that, again, is the HST that you have paid. Or, again, I apologize for saying HST, but in the province of Ontario, it's HST, but the appropriate jurisdictional taxes that you may pay in each province. Okay? You still need to record it, manage, and maintain it in the appropriate ledgers, journals, and books. And one thing, if you notice, an expense book is a critical component of a law society's audit checklist. Okay? So we spoke about disbursements, and now we've spoken about office expenses. A very fundamental difference is that disbursements are recoverable from your client. Office expenses are not. Okay? And that's exactly what we're trying to outline in this particular slide. When I mean recoverable, what I really mean is that you have the opportunity to get paid back that amount in the form of a payment towards an invoice that you should generate. That invoice should very much outline the expense or the disbursement that you have paid out, the reason, the timeline, the amount, including the HST. So let me give you a quick example. Let's say there's a small claims or landlord and tenant board matter. If, let's say there's a court fee or an application fee that you pay for on behalf of your client, especially if you paid for it from your general account, then the simple life cycle of that disbursement and how you recover is that you first incur the expense, you pay for it either through your business credit card or through your general account as a check. Let's say you pay $100 as an application fee. Now you include that $100 as an expense in that invoice as a disbursement, and you send the invoice to your client. The client then pays you that $100 back as a client payment, and you deposit that money into your general account, and now you've recovered the $100 paid through that client payment of $100. Okay? Now, knowing that it's a clear-cut recoverable expense, why it's important is that you track them. Why do you track them? Is because if you don't track the disbursements as and when they happen, as I mentioned earlier, you do stand the chance and the risk of not being able to recover it in time. Okay? Because many times the law office is really busy. If you don't capture the moment as and when it happens, it's going to be harder for you to backtrack. You could always go back to your bank account, but that's going to lead to time. Sometimes clients may not entertain that you send them an invoice with that expense 6 months after it has occurred. Okay? So you do stand the chance of the client saying, you know, I'm sorry, I can't pay for it now because you never sent that invoice on time. Or at the least, it's going to lead to certain bad taste and showcasing the professionalism that you're otherwise expected to showcase as a legal firm. Okay? So very important, have a methodology, have a process, have a bookkeeping software, or any manual process, even if you're doing that, a discipline that allows you to capture, record, track, and make it as part of that invoice cycle so that you can recover it. Okay. Now that we've spoken about disbursements, here's a quick snapshot on how best to manage disbursements. Okay, what are the key steps? Now, as a legal firm, as you better appreciate, one of the very few professionals in the world that can actually use a trust account where you can actually deposit money in advance of you rendering a service. And there's a little leap of faith or a trust factor, as the name sounds, that you sign up with your client or your client signs up with you, that you would not misappropriate that dollar that the client has paid you in advance. And hence, you know, with more power comes more responsibility. So you as a legal firm are obligated by the Law Society and have the responsibility of tracking each and every dollar that you have either deposited or have spent through the trust account. But that does extend itself as an opportunity where you could still use the trust account as a means to disburse your clients for client expenses. And if you do use the trust account as a means of using it for disbursements, you technically don't have to generate an invoice. Okay, it's one step lesser and one step of bookkeeping effort reduced if you, from the get-go, can figure out how best to utilize your trust money to also pay for your disbursements. Okay, so either learning from others in the business or through the experience that you've gained of being a legal professional in certain areas of practice, you may appreciate and understand that there's a certain set of disbursements involved. Okay, nothing less, nothing more. Now you can use that experience to talk to your client and say, my legal fee is $500 plus tax, and I most certainly know that there's going to be at least $200 of disbursements for this certain file. So you may actually make it a habit to accept a $565 plus $200 disbursement, a $765 retainer right from the get-go. Tell your client that you're going to spend disbursement money right off the trust. So the audit trail, as you move it out of trust account, is very straightforward and clear. Okay? But in terms of managing and disbursements, whether you manage it from trust or whether you manage it from general, what's the big difference between these two is when you manage it from general, you have that additional step of a responsibility of paying for it first out of your general account, generating an invoice, and that invoice is the formal way in which you're going to record and showcase to your client that this is the expense that's been paid for and request the payment, and then accept the client payment. You've got to wait for the client to pay you. Or you may do a trust transfer if you have money sitting in trust. Okay, so if you are paying expenses, client expenses from your general account, just keep in mind that there is an additional step, a bookkeeping step, which is paying for it. And the additional step is that you have to generate that invoice and then accept the payment or do the trust transfer. If you are paying from your trust account, you do not have to generate an invoice because the money is going right off that trust account. Okay? Regardless, here are some key salient features of expenses and how you track them, both be it trust or general. First, you'd record when it happened. So when did that disbursement get paid? Let's say it's a court fee. When did that court fee get paid? Was it today? Was it in August? Was it in September? You really need to know when it was paid, because that's fundamentally going to go back to reconciliation and ensuring that books are on track. Okay, so when was it paid? How was it paid? So it's easier for you to then manage it knowing how you paid for it. Did you pay, a trust check, or was it a general check? Did you pay using a credit card? Okay. Was it an electronic transfer? So really tracking how it was paid for. And the third is, what was the reason? Was it a court fee? Was it an application fee? Was it fax? Was it printout? Right? There could be very different types of disbursements. It could be unit rate in nature. It could be a mileage. Okay, so it's very important that you capture the when, how, and what the reason was for. And then you want to capture the client's name and specific matter for which that disbursement had incurred. Okay, so it's very important that you capture not only the client, but the specific matter or file for which that disbursement was spent, because you may end up having multiple matters for the same client, but it's very critical that a disbursement is more married towards the matter than the client. Though the payment is received from the client, it's important that you receive a payment for a specific matter so that it's easier for your reconciliations. Okay. Now we spoke about how you can pay this disbursement both from trust and general, but if it's paid from the general account, let's assume, and that's the general thumb of rule. Most legal professionals do use the general account to pay for expenses, client expenses or disbursements. It's important to capture what portion of the invoice do you want to include that disbursement in and the cycle, okay? Because There are various different styles in which legal professionals work with their clients. One could be a flat fee, which is all-encompassing. There could be other styles where it's a flat fee plus disbursement. There could be a situation where it's billable time and flat fee mixed with disbursements. And how you invoice the client is also equally important. Are you going to do it as and when it happens? Or if you're dealing with corporate clients, I mean, do you deal on a timely cycle? So let's say you agree on an agreement with your client that you would generate an invoice every month and include all the disbursements that have incurred in that month in that particular invoice. So you wait for the entire month to add all those disbursements in that period. So you really need to figure out those components, the timeliness of the invoice itself, and when you capture those disbursements in those invoices. Okay, and that's purely based on your retainer agreement or your engagement agreement. One of the recommendations that we have, and we've seen this through other experiences working with legal professionals, is also the habit of generating a preview or a pre-bill. A pre-bill really gives you the power of being able to see what a typical invoice would look like, but it's for your eyes only. Sometimes clients even send a pre-bill to their, or legal professionals generate a pre-bill, send it to their clients, get their approval, make sure that they're happy with the invoice and the disbursements that are therein, and then generate the actual invoice. Okay, so this gives you that extra comfort and the insurance that the client's already reviewed it and there aren't going to be any issues in having to pay for it when they actually receive the invoice. Okay. Ensuring that you're doing it on a timely basis so that you can recover and get paid for those expenses. As I said, we've heard of cases where certain disbursements were not tracked on time, and when the legal professional went back to the client after a few months to say that, I'm sorry, I may have missed out on that disbursement charge that I did not charge you during the actual time when I was dealing with the matter. Unfortunately, in some cases, the clients have, negotiated not to pay for it because of the timeliness that was not met, right? And the last but not the least, as I mentioned, recording those disbursements within an invoice, generating that invoice. Very important that you use that as the formal document to send it to your client, and so that you can be certain of recovering that expense. Okay, so here's this particular screen, I truly like this screen when I'm explaining it. We spoke about how you can generate or disperse both using trust and general. I'll probably just move to the next slide, but keeping in mind some of the examples of using the trust account versus the general account. Okay, so how do I keep it simple? By paying right off your trust account, as I mentioned, you are negating that extra step of invoicing. So for certain types of expenses, right, especially those where you're going to actually pay for the exact amount of the expense and charge them the exact amount for what you paid for, such as court fee. It's a great example of you being able to pay for that fee by writing a trust check. And this is one of the practical examples is when you set up your account, when you go to that bank and set up your account, you may want to request for checks both from your trust account and your general account, okay? Just as an option. Because you may end up working on certain files where you may think about it and say, all right, for this particular file, it may just make more sense to pay for these client disbursements right off my trust account, okay? The reason for that is when you pay it from the trust account, I reiterate, you don't have to recover that expense through generating that invoice, right? And our point is if it's not your money after all, you're not looking to make, let's say, a margin on a expense or a disbursement, it's just easier for you to manage and showcase it as a trust ledger rather than a general account. Now the other side is the general account, and that's when you, okay, so let's say you don't have to deal with the trust account. You don't want to get into the nuances of the trust, and you rather pay for it up front. Sometimes legal professionals collect points if they're paying out of their credit card. They have a methodology, they have a very disciplined process of tracking it and recording it and invoicing it, and that's how their style is. And by all means, use the general account. But it's still important to capture those salient features of that transaction. The date, right? So when it happened, what was it for? How did you pay for it? Which account did it go after? Did it come out of, sorry? And which client and specific matter was that disbursement for? And I've spoken about this particular slide. How do you recover that particular expense? Ensure that you track all the disbursements by putting that in as part of your file. The amount, especially including taxes, if appropriate. Now, there are certain disbursements, such as court fee or application fee, that may not include disbursement taxes, so you can always negate the taxes there. But for others, where there are taxes involved, you certainly need to showcase them. So once you've recorded it, make that as part of your invoice, generate that invoice, send it to your client, and if you have trust money, then you've just freed up, by just invoicing the client, you've just freed up that eligible trust money that you can transfer from your trust account to your general account. If no trust money was involved, if there's no retainer to begin with, then let's say you've just charged the client a $100 disbursement invoice, then you're just going to have to follow up with the client and ask them to pay for it, and then deposit that money as a client payment right into your general account. Okay? And before we move into an actual demonstration that outlines how you can easily track, record, capture, and go through this process and the appropriate law society ledgers, let's finally just take some examples of types of disbursements that are either trust only, general only, or both in nature, just as a general thumb of rule. So if you're looking at a billable expense, you could obviously look at both trust and general as great examples of using them. If it's a unit rate or mileage, and we recommend that you use the general account. If it's travel time, again, general account. And to be very specific, if these are actual expense amount that you're looking to recover, you can certainly use both trust and general. If you're looking to use it, recover the expenses either with a profit margin or a loss margin, then most certainly only use general account. Okay. So if it's actuals, so if you paid for $100 and you're charging the client $100, then you can use both trust and general. But if you're going to be, say, you paid $50, but you're going to charge the client $100 for whatever reason, then you certainly must only use the general account. Okay. Once these transactions or record keeping has been done, let's say you've tracked it, you've generated the invoice, you've even accepted the payment, there are ledgers, journals, and as I said, expense books that have to be managed and maintained by you as a law society requirement. So disbursement ledgers and journals for both your trust account and your general account are reviewed. Fee book with appropriate taxes captured need to be shown. And we'll look into certain examples when we demonstrate the product in terms of what a ledger would look like. But for now, these are just examples of screenshots taken out of the bookkeeping guidelines. Okay, so it's very important that you capture the particulars, you capture the receipts, the disbursements, and the outstanding balance in each of these ledgers and journals. Okay, so that's kind of really the first part of the expenses. We've spent about 25 minutes now speaking about the client expenses or disbursements, and I'm hoping that it was a bit too elaborate. If not, kindly use the chat window to ask any questions that you may have with regards to disbursements, everything that we've spoken about in the last 25 minutes. And now I'd like to move on to the other side of the house. We spoke about the other side of the house being the office expenses or business expense. And you can interchange those terms. These are the expenses that are not recoverable, right? These are the expenses that you're going to incur to keep the lights on of your business. So in layman's term, again, we mentioned it before, the expenses incurred for keeping the lights on in your legal office. Accounting terms, you still need to manage them, record it in your books to balance your accounts when you spend and manage your office expenses, including taxes. Okay, so I'm sure you have better examples to think about, but some very common examples of office expenses include any furniture that you purchased. And the more and more we see legal professionals working in a very virtual environment. So, but if it's a law firm or a larger law firm which employs multiple legal professionals, then maybe there is a need for a very physical space and all the furniture and things that are required. But for a solo practitioner, small law firm, they do take advantage of being a very mobile legal professional. So the expenses may be slightly different for them. But some of the common expenses that you will certainly incur as a legal professional include the law society's fees. Okay, everyone deals with their appropriate jurisdictions, law society's fees. You have maybe an insurance that you have to pay for, right? You certainly have to deal with any bank charges or even dividends sometimes. You certainly have, again, depending on the size of the firm and how it's managed, there may be salaries for, assistants and front office staff to maybe other colleagues that are working with you. And in certain cases, paying rent, property maintenance, interest, these are great examples. Cell phone bills, a very common expense for especially entrepreneurs and solo practitioners. Entertainment, office expenses, meals that you incur to entertain potential prospects or someone who's not a client to spread the word. Marketing expenses, promotional expenses, advertisements. So these are really good categories. It would really help if you can define these categories, again, either through learning it from others in the industry or through the immediate experience that you gain in dealing with it. Create these categories and mark these expenses across these categories so that you have a better understanding and a smarter decision-making capability at the end of the week or month to know where your expenses are going towards. Okay. So for example, if you don't know that you are spending a lot of your money on rent, then it's going to be harder for you to make a smart decision, if at all, if you can, which is to change the location or negotiate a better rent, right? So first, to make a smart decision or a business decision, you probably need to first understand the data. And for that, you need to track it and categorically track it so that it's easier for you to track it. How do you record business expenses? Okay. No exceptions. It's best if you can record them as and when they happen. Okay, so let's say you had a gas expense. A great example is to take a picture of that and make it available right away as part of your bookkeeping software. Or if you want to write it down in a notebook and then come back and immediately put that in as an expense, great. Or in some cases, if it's just too much to deal with it on a daily basis, at the least work on it over the weekend of that particular week. Okay? What information are you capturing when you're tracking and recording these business expenses? Just like your client disbursements, you're still capturing the date of the expense. Because the date of the expense is important for you to know when you incur that expense so that it can reflect on your expenses and hence can reflect on your profit and loss, right? So revenue minus expense, if it's positive, it's a profit. If it's negative, it's a loss. Very standard, basic examples. But let's say I had an expense in October, or let's say my quarters are from my financial year is January till December. So it's very important that you capture if an expense occurred in August or September compared to October, because if it occurred in September, it's a Q3 expense. But if you tracked it and it's occurred in October, it's a Q4 expense. Okay? Marking as the type of expense it is, again, as I mentioned earlier, so that you can better understand where the money is going. The total amount, including taxes, because this is important from a jurisdictional tax perspective. Because the amount of tax that you owe the government, I'm talking about your GST, PST, HST, is again a combination of taxes received through those invoices from your client and any taxes that you've paid as a firm or as a company towards expenses. Okay, so if you're not tracking that, then you're just missing out on the opportunity of reporting it as part of your taxes. How did you pay for it? Very important, so that you know which account to deal with. So a legal firm may have a general account to pay for expenses on behalf of their business. They may have a business credit card. There may be individuals that have paid for these expenses. So you may have an assistant who purchased paper from Walmart because either you didn't have a company check or the company credit card was not available and they paid for it, in which case that's money owing to that employee. You may have paid out of your owner's pocket, which is, if you're a solo entrepreneur, that's a great example. Initially, before you have money in your general account, you may have incurred expenses like the Law Society fees, where you may have paid for it out of your own pocket. Use your own personal debit card or personal credit card, right? So tracking how you paid for it is very important. So in the next 15 minutes of, in a few more slide shares later, we'll look at how you can track them as well. And what are the documents that need to be managed for dealing with office expenses? You certainly have your expense book. We spoke about that. You certainly have your HST or GST or PST payable statements. Expense statement, profit and loss, and any borrowings report, depending on your firm situation. Okay. And for kind of the last slide share, as I said, from a data perspective, there is a reporting structure that you need to concur to for Law Society requirements, because they're going to specifically want those specific reports in a very specific template so that they can quickly assess the situation of your files and books, right? But for you as a today's consumer, you're as a legal professional that's fast-paced and needs to crunch data faster, we believe having dashboard capabilities to have a holistic view of the expense information and being able to compare and contrast is almost becoming a necessary component of either your methodology or your product that you're using, the bookkeeping software, or the process that you're following. So you may actually have an Excel sheet, but we still believe have an Excel sheet that has visual dashboard or visual aid capabilities so that you can review it faster, consume that data faster. Okay, so we'll take an example of how analytics plays a huge part in helping you make smarter business decisions. Now we'll talk about quickly, fundamentally using a software. We're not promoters of any specific software. I mean, we are a legal accounting product ourselves, uLawPractice, but this is a specific session meant to highlight the need of the hour, which is using a software so that you can better put to use your time for other higher value things. But you as the legal professional would have to do your due diligence to figure out which product works best for your style, your cost preferences, and the way you work. So please do the research and figure out which product works best for you, or even if it's not a product, if it's a process, or even if it's a manual process, figure out a way that can, how do I say this, can work behind the scene, even when you're, it's like how they say you got to make your money work when you're sleeping. Very similar. Figure out a way or a process or a software that can work for you so that you can spend your time on other things, okay? And why a legal accounting software even? So let me start with software. Software can help you automate many of the calculations that you have to do. For example, HST, simple examples, can allow you to automate the summation of information. Otherwise, you're going to do this manually. You have to do the formulas yourself. That leads to certain, that can lead to human error, whereas the software allows you to avoid that, so the amount of error. Softwares do allow you the capability now in today's agent world to be able to capture it either through a system that's available online or on the cloud across multiple devices. So today we're not just restricted to using a computer or a desktop or a specific device in an office. With the mobile legal professional, you're using tabs and you're using iPads and mobile phones, laptops, combination of these devices to manage information about your legal office. So software can certainly give you the flexibility of being able to enter data as and when they happen, right? But why a legal accounting software? If you're considering software to purchase, or if you're considering software to help you with this process of tracking expenses, do consider a legal accounting software first. And again, obviously, if it doesn't work, you can move on to anything else. And the reason we specifically talk about that is because of the compliance nature of legal accounting. The ability for legal accounting software that are purpose-built to manage certain components that are more specific to the legal aspects, such as trust and so on and so forth, okay? And the accountability that it comes with. And the reports that are built in, whatever product that you may be using, gives you that ease of use, but also purpose, because it was purpose-built for specifically legal professionals, okay? Okay, so I'm going to jump and spend the next 10 to 15 minutes to just reiterate real quick as to how a legal professional or a law firm would capture expenses incurred both on behalf of clients that are the disbursements, and we'll talk about how you can track and record expenses that are incurred on behalf of the business, the law firm itself, and how that reflects in the different books or ledgers and journals that you are required to produce on a monthly basis for both law society compliance and in many cases CRA compliance as well. Okay, and a quick note from who we are as a company. We are a Canadian legal accounting and practice management software, and legal compliance at a very competitive price is what we do best. If you want to give us a shot, do check us out at uLawPractice.com, and we'll be happy to provide you and set you up with a 30-day trial that gives you a fair chance to evaluate if this is a product that's worth your money. Okay? So I'm going to spend the next 10 minutes, and if there are any questions, please feel free to ask me at this time. For those who do have a challenge with the audio, I would kindly request that you do use the phone lines provided. Sometimes the audio through the computer may be a bit harder than using the phone lines. Okay? Just a humble request. Okay, so I'm logged into a fixtures uLaw account, a legal professional by the name Roger Moore, and let's assume Roger is a solo practitioner, and it's his law firm, and we're going to talk about how do I first capture disbursements, office expenses, and how it reflects in the appropriate books. Okay, so I'll try and maybe reverse the situation, and I'll first maybe capture office expenses for today, and then we'll jump into creating a file. So let's say there's an office expense that you've incurred today. We'll add a couple of more. The first and foremost is you defining those categories, and this can evolve with time, right? So you can evolve these categories with time, but you have a better sense for it having dealt with your business or a few weeks to know the types of business expenses that you may incur. Helping you set up these categories really allows you to capture those expenses and categorize them as well. Okay, so once you've set up these basic categories, let's say there are a bunch of office expenses that you want to report, that you want to capture for today. I'm just going to go into the office expenses. As we mentioned, capturing the date in terms of when that particular expense occurred, always a great habit. You can always backtrack if you have to catch up expenses. So let's say today, for one, there was a printing and stationery, so purchase of a laptop maybe. I'll say purchase of iPad, and you can put in the total amount. And this is where software helps. It can automatically calculate the pre-tax and the taxes that you have paid for. Okay? Or if you put the total amount pre-tax, then software can help by calculating the appropriate taxes that you may have paid based on the jurisdiction that you're in. So I'm set up as Roger Moore being in Ontario, but if you're in another province where they're capturing GST and PST, it also captures the appropriate information. Okay? Okay. Now, obviously, we said what was the purpose. So the purpose is I paid for it to purchase an iPad. And I could say I paid this to who? Now, this is an office expense, so it's not to a client that you're incurring this expense. This is you paying Best Buy to purchase an iPad for your firm. And this is where you have how you paid for it. So maybe you use the Gold credit card, the TD Gold credit card. That's a business credit card to pay for it. And you can basically put in a reference number that TD would have provided you with for that particular transaction. Okay. Now, if someone else paid for you on your behalf from your firm, you can choose whether it was Amrit Singh or if it was Sandra Bullock, who's your assistant, in which case then the firm would need to pay Sandra back that $615. Or you have the option of saying, you know what, I paid for this as a sole practitioner, Roger, not for my business, but I actually paid for it from my own pocket, or in which I can say paid for using personal debit. So this then captures it as a owner's pocket expense where you paid for it out of your own pocket, and now the business, Roger Moore's law firm, owes Roger Moore the $615. Okay? So it's easy for you to capture, and once you've set up these categories, it's easy to categorize those expenses as well, right? So I'm going to say it's Best Buy, paid out of my credit card, and that's it. And hit submit. Obviously, doing it one at a time is not great, so you can always do multiple transactions at the same time, right? So you could say a batch import. Let's say you want to do 10 transactions at the same time. You have, or let's say 5, or even 3. You can reduce whatever is your limit, right? And you can go about putting the same expense. You can say expense details, gas, okay? If it's 80, including tax, you can just say it's an it's an office expense. It pre-populates all that information. Gas expenses, $80, captures the pre-tax and tax, and you can just say SO, again, or the credit card. You can even say save an expense and move on to another expense right after submitting the gas expenses. Okay? So now you've technically recorded a purchase of an iPad, you recorded a gas expense in the same day, both using your TD credit card, and let's say you paid your Rogers, so you paid your telephone bill, you can actually capture that as well. So these are just categories that you can create. Phone charges. And Rogers would provide you with an invoice number. You can put that in. So 65 including taxes. You can set up vendors if you already know the types of vendors that you're dealing with. That's one thing you can do in uLaw is you can set up, or even any other software, you should be able to set up vendors to pay for. And I'm just going to say that's transaction again. So 3 transactions is less than 5 minutes for you to capture. Okay. And if I, let's say, close out of the screen, I go into my credit card, TD Gold credit card, you should automatically see those top 3 transactions, the $6.15 for the iPad, the $65 for the Rogers bill, and $80 for your gas expense. Okay, so we spoke about how office expenses need to be tracked as and when they happen, and the appropriate documents in which they reflect. So let me look at my document generation, generated compliance. Okay, so there's a quick question about how you can capture a certain percentage. That's a good question. You can do the disallowed expense, which really, that's a great example where you may charge, so for example, the pre-tax amount may be $50. Let's say you went to have meals, and you actually had a disallowed expense of, let's say, $10 of tip, okay? Then you don't want to really incur that as a charge, or you want to charge that to a client. You can use the disallowed expense to track any specific component. In terms of percentage, you may have to divide and figure out how much you want to charge and not charge by putting the appropriate amount as the final charge to your business. But in terms of a report, with another 8 minutes, I want to jump into capturing client expenses. So once you've captured these office expenses, you certainly have the expense book right under a compliance panel in uLaw to capture the expense book and the expenses that you've incurred, including the HST that you paid for. Okay, so let's quickly review that. So it's obviously chronologically, it's done in an ascending order of date. These are all the expenses that you incurred. Keep in mind that the expense book, as you see here, include expenses that have been incurred on top as a business, as well as a specific client. So it has both disbursements. The expense book has both the disbursements and office expenses. And here are the 3 transactions that we captured right away today. One was the purchase of iPad, $545. There was the gas expense of $70.80, and then there was the Rogers bill. And these were the appropriate taxes paid for it. And this also immediately reflects in the appropriate tax document. So you can say HST, and I want to do it for today, because I know I did it today. And it tells you right away that today that the HST that you've paid for were these 3. The iPad, gas expense, Rogers bill. So just entering the data about that particular office expense automatically has resulted in 2 separate documents that are important for you to produce as both part of your CRA's requirements as well as part of your law society's requirements. Okay, and the beauty of the software or legal accounting software is that it also captures any HST receipt. So today I captured $13 as part of a legal fee for Mr. Sam, and it tells you by comparing these 2 that as of today, that would be the return that you should expect. Now, if I were to generate the HST document for this quarter or month, depending on your firm's cycle, then that information would change, whether you should expect a return or whether you owe the government any taxes, okay? But the important component is that it takes both HST paid and HST received to tell you the total return. So we looked at how you can input office expenses and how it reflects in these different documents. The last analytics capability that I want to talk about is for you as an owner wanting to know, all right, where are my expenses coming from? I want to know by category, let's say for today. I can choose today just to keep the use case simple. So today, the 3 expenses that I've had with 3 different categories. 80% went to my iPad, printing and stationery, 10% went into my gas expense, and another 8% went into my phone charges, right? And the beauty of software today, including uLaw, is that we also provide you with the app that allows you to now carry this information on your mobile phone if you prefer, by downloading the app, okay? And what is the beauty is that you can now compare what was my expense category like for the whole month, or what was it yesterday, or this whole week. And I can compare my today's expense with my monthly expense for the month of October in a single snapshot, okay? So you know this is my monthly expense where I paid the Law Society almost 41% of my expense came there, 26% of that, out of which 80% of that was today. Okay? So the analytics gives you the depth and breadth of being able to compare these decisions so that you can take a clear-cut decision on what you want to reduce if you plan to reduce expenses for your firm. Okay? Now let's move on to the first component of expenses, which was truly the client expenses. So let's quickly create, so let's just jump into this client that I've already created called Sam Monsters. I'm not sure why we created that name, but I apologize, Sam. This is a playground account, so don't take it to heart. Sam is actually the name of one of our colleagues too in the company. All right, so let's say you've created a file. So it's very important that you create a specific matter, and as I mentioned, client expenses or disbursements are specific to a matter. Okay, it's not to Sam, but it's the consultation file SM9780099 for Sam. And now this is where you have the opportunity to, let's say you're accepting a retainer. You can basically go ahead and say, I got a new retainer for Sam, and it's, as I mentioned, $565 plus $200 disbursement. Say I got a check from Mr. Sam, and I'm going to apply it. I'll skip the receipt for now. I want to take the first example where you're paying for the expense right off your trust. Okay? Okay. So let's say we have a docket which says, let's say we've done this final consult completed. Okay. Again, this is just, I'm just using random information, but this information would outline really what the work has been done. So let's say I spent for the entire matter about 3 hours, and I'm charging a flat rate of 500, which would become 565, right? So I put my docket in. We mentioned disbursement can be part of or should be part of that cycle. Let's assume for this matter, I have signed up a retainer agreement that says that I'm going to charge you as and when things happen. I'm going to take the first example where you paid for this $200 court fee right off your trust account. Okay, so if you were to use the trust tab and money, there's either money coming into the trust account or money leaving the trust account. So in this case, it's money leaving because you're paying out of the trust account. If you can see, the projected balance is 200, meaning that's what's technically left in the trust account after the 565 that we've just generated a docket for. So let me pay disbursements from trust directly off the trust account. I'm going to say $200. Here's a trust check. I'm going to write a trust check. I'm going to say court fee. Very important to capture. What was it for? Right? And who did he pay this to? So you can say Ministry of Finance or Ministry of Attorney General, whatever may be appropriate. Capture the date, the amount. You can even print that check if you wanted to leave your check on your printer. But I'm going to skip that. Keep in mind this $200 and the projected balance of $200. Once I reflect that particular disbursement right off my trust account, meaning I'm going to now cut a check of $200, you don't have to generate an invoice to recover that expense when you're paying on your trust account. Okay, that money is taken right off your trust account because that check is a trust check, and when the court encashes that check, that money is going to be taken out of your trust account. Okay, but you would know specifically what it was for because now you're able to track that $200 that went off. Now, when you generate an invoice, and you can do a pre-bill. So when you generate that invoice for that client, you would notice that the $200 is not a recoverable component in that invoice. It's already been taken out of. The invoice is just to reflect and tell your client that, buddy, I've already taken $200 off your trust account going towards that court fee. Okay? So they know how their trust money was used. And the 565 is the legal fee that truly you're now going to recover through this expense, through this invoice, sorry. So amount due is 0 because you had 765 in trust and you invoiced him 500 plus 65, which is the final consultation. And this 200 that was paid as a disbursement. Obviously, there were other transactions. So the new retainer was 765 and you paid from trust $200 for that disbursement. Okay. Now, if I were to look at so that's one example. The other example is where, let's say you paid out of general. So I'm going to say paid from general. So this is where I paid for it ahead of time. And let's say this was software fees. And let's say you're charging your client $100 and maybe not charging them tax. So let's just say it's 100, no tax, but you have, as a business, only incurred $50. So you're making a profit margin of $50 on this particular disbursement. You can do that. And you can say, what was this for? Software Inc. Out of your credit card. This is a great example of a general disbursement with a specific reason of you doing it with a profit margin. But this $100 that you have just reflected as a disbursement in this matter now needs to be recovered because it was paid for from your general account. So you're going to notice that the client owes you that $100 and it tells you right away that the invoice pending only through that invoice. So let's complete and generate that invoice too. It's invoice, skip the preview. Now this invoice is going to reflect that $100 disbursement that you've just charged your client. Okay? So the first example was where you paid your disbursement off trust, and the second example is where you paid the disbursement using your general account. Okay, there was no legal fees, but there was a disbursement of $100 with no tax. Through this invoice, which is invoice number 2983, is what you're going to recover a client payment. Okay? So when you actually go into accepting that client payment, you notice that there's $565 of pending trust transfer, because that was the legal fees, if you remember, that we were dealing with. And then there's the $100 that you now are able to recover through that 2983 invoice for that final disbursement for software fees of $100. Okay, I hope you were able to appreciate the features of how you capture expenses, especially both client expenses and office expenses, right? And accepting that $100 is the final step in closing this file, because it tells you clearly there's $100 left that the client owes you, and you haven't told whether you've accepted that payment or not. So let's accept that payment. Maybe the client gave you a final check for that $100. And legal accounting software also helps you with data quality. So if you put in $120, Even if you type in 120, it's going to reflect it back unless you want to override it. Okay? Now let's look at the last couple of minutes, the appropriate documents that reflect all of the ledgers and journals, right? Through the work that's been accomplished in this particular matter. So if you look at document generation, the compliance component, the first thing is regenerating that expense book, which now should include not only the office expenses that you incurred, but the expenses that you incurred on behalf of the client as well. So there are now 4 transactions, including the software fees that you had charged Mr. Sam Monstrous. Okay? Now let's look at the general disbursement for today. And these are just available at a click of a button once the data is in. So clearly it tells you the different disbursements on the particular firm. And if I were to do a client's general for today, this would include Mr. Sam Monstrous as part of that general ledger as well. Okay, there you go. Sam Monstrous is the first client today. That includes, let's say these were not dealt with, but you did receive the $565. We did the legal fee transfer. The $100, that was the disbursement that was recovered, leaving you with a 0 balance. Okay. So again, for closing notes, the idea is as a legal professional, you're obligated to capture, track, record, and showcase it to your client all the expenses that you've incurred on their behalf through disbursements. And you as a business owner have the responsibility of tracking, recording, capturing, and showcasing all the business expenses, including taxes that you've incurred from your office perspective. And there are documents and ledgers and journals that reflect and tell the story about these transactions being recorded, and that's what's being used and tracked by law society auditors, and in the other side, it's the CRA that may look at your expenses when you record and report it as part of your profit and loss, right? So when you generate your revenue or expense account or even your profit and loss, let's say for the month, this particular document captures the expenses paid. So it's very important that you capture the expenses that you've incurred in your law firm, both from a client's perspective and as well as your office business expenses perspective. Okay, so you look at the printing and stationery, you know the 635. You can generate this per day as well. So in closing notes, keep in mind that as a legal professional that you're definitely required to capture expenses incurred by the law office. Hopefully this seminar gave you a better insight to how you do it and the opportunity that you have to manage expenses, especially from a client's perspective, using a trust account if you plan to do that. And as mentioned earlier, today's webinar is accredited for 1 hour of professionalism CPD credits, and we encourage you to visit your individual law society portal and search for Law Office Expense Management to record and gain that 1 hour CPD credit. So thank you once again for joining us today in our webinar, and we look forward to seeing you in our next webinar next week. Thank you. Take care.